Hey guys, JP Fluellen here, Titan Real Estate Team, eXp Realty. I've got a couple of quick nuggets for you guys today. And we're gonna talk about 15-year mortgages versus 30-year mortgages. Your typical mortgage you're gonna get off the shelf when you go and talk to a lender, get pre-qualified, go look at a property, and get under contract and close, that typical mortgage is gonna be a 30-year mortgage. And that is the lengthiest mortgage you can get as a private consumer. And basically what that does is it allows you to distribute your payoff date 30 years into the future. And why do we typically think 30-year mortgage? Because it is a flat rate mortgage that gives you the lowest down payment that you can have over the longest amount of time. And that is typically appealing for first-time home buyers because it does give you a lower down payment, and it does compete with probably paying rent is probably what you've been paying before. And so a lot of times that 30-year mortgage can be cheaper than rent. Now, the downside to a 30-year mortgage is just the sheer amount of interest that you're gonna pay over those 30 years. And so if you look at your amortization schedule and take a look at how much interest you're actually paying over that 30 years, I think it's almost, I wanna say it's almost double, if not 100 and almost 200% of the purchase price. So you wanna take a look at that. That's pretty amazing on how much actual interest you're paying on a 30-year mortgage. Now, the typical length of time a person spends in a home nowadays is typically 3 to 5 years. It used to be about 7, but I think now it's around 3 to 5 years is that the length of time a person typically will spend in a house. Now, if ultimately the goal is to get that house paid off, then I would definitely look at a 15-year mortgage. And sometimes you can even do less than that, depending on what your payment is and what you're comfortable with paying each month. Because what they'll do is they'll do like a modified 15 to where your mortgage is actually paid off in 10 or even 5, depending on how hefty of a payment you want to make. But the plus side to that is that you're also paying less interest, and so over time you're actually paying closer to the purchase price on that home over that length of time. And so depending on your circumstance and your level of comfort with your monthly payment, you know, you might want to look at a 15-year note, as well as to help buffer against that payment. You put a little bit more money down, and then it's kind of a win-win. So depending on your situation, you may want to visit with your lender on what is right for you, because a lot of times they will not bring up a 15-year mortgage unless you as a consumer bring it up. And sometimes the difference, because of the interest rates right now and how historically
low they are,
that a 15-year mortgage is actually pretty comfortable. So definitely reach out to your lender and visit with them about what is going to be the right mortgage fit for you. So there you go. I'm JP Fluellen, Titan Real Estate Team, eXp Realty, and you have a wonderful day. Peace.